incredibly complex. Digital currencies is very, very complex. There's technologies, the economics, there's finance, there's policy, there's legal implications to it. All of that is kind of converging in one place. And a lot of the banks want this kind of information share, and we're kind of really proud to be kind of in the center of that.
Yeah, I think it's phenomenal what you guys have been able to do, and especially as you say, with kind of such a short lead up to these workshops, and especially just being virtual right now. And we know at Currency Research from efforts that we've had to run virtual seminars and get banks involved, it's definitely been an interesting year for that. And it kind of ebbs and flows with the amount of interest. But you're right, it's a hot topic, and it seems to really be going over well. And as you mentioned, we're going to talk more about doing a summit together in DC, and we know we're going to be doing a workshop right before a digital currency conference that we're holding in February, and you guys are going to hold a central bank workshop on February 24th for that. So we're really looking forward to that. The topics, it's one of the easiest agendas to get topics for right now, because there's so much. In that sense, it's also difficult because you have to pare it down to something that can fit, but it's great. So I don't know, John, if I know you've been involved, as an expert going through these meetings with the central banks and staying up on what's going on in the industry right now. I see a lot of your posts from Kiff himself on LinkedIn. Almost, I think every day you try to get something up there. At least I've seen it. I'd encourage anyone who's not on that channel to look him up. It's great stuff. But maybe if you could just take a couple of minutes and it's a wide open question, just in terms of what's most topical right now in the CBDC space. What's the one of the biggest trends or issues that you think is out there right now?
Thanks, Shaun. First of all, I'd just like to sort of add to what Jamiel was saying. That I think what drew me to this the think tank was that there's a gap here. I think there's you might think that the IMF and the DIS could be playing this role of bringing central banks together to share experiences and learn from each other. But they're not really doing a very good job of it. I would say quite bluntly. The BIS has its little special club of 6 or 7 advanced economy central banks that's working on. They've issued paper already, and they're working their way through sort of a series of papers that will talk about the standards that they think they should have for central bank digital currency. But it's a very exclusive club. There's a few other of these very exclusive clubs that orbit the BIS and the IMF world, but I think the gap here is that we need a place where central banks from both advanced economies and developing economies can get together and share experiences, ask each other questions, and we've seen that in this workshop that people they're talking to each other, they're asking a lot of really good questions, and I think that the think tank is going to be going forward. It's going to be a very important resource for all central banks, specifically, especially the ones from developing countries, because they're kind of left out in the cold, and they're easy pickings for the likes of Accenture and other firms that are coming in with their particular platform and saying, okay, this is the advice we give you. Please use the platform that we advocate. And I think it's really important that we have this sort of open-mindedness and platform agnosticism. And that kind of leads me to your question. I think that's one of the big questions out there is, what kind of platform should I run this on? Should I jump on a distributed ledger technology or blockchain type platform, the same platform that, say, Bitcoin rolls on? Or should I go with a centralized one that's more like the way we run bank accounts and so on? Or do we go with a token-based system off stored value cards and so on? And that's where we get back to this problem where there's vendors out there that they specialize in one of these or another, and they're basically orbiting or traveling around the globe with their suitcases. This is pre-pandemic, I guess it's virtual now, and knocking on central bank doors and selling their product, and so I fear that many central banks are just jumping into one particular platform, the one that comes to them first with the slickest sales job. And I think the role that we play, and I think the IMF and BIS are all trying to do the same thing too, is to have everyone step back and start actually right at the top of the decision-making tree. And so sometimes CBDC may not even be the right solution to the problem that the central bank is dealing with. So what we try to advocate is a framework that's very much like the one the World Economic Forum recently introduced in their toolkit, when they presented that in the first day of our workshop. And that's one that we start right at the very top. You say, what are my pain points? What am I trying to solve here? And then after that, what are my options for solving that? And one of them is CBDC, but there could be other ones too. And then you march on from there and think about the risks you might be introducing by introducing CBDC. There's the various financial stability risks one should consider, whether the resources at the central bank, whether you've got the resources to actually do this. And then you think about the design features, because there's lots of different designs you can place on CBDC. For instance, you could make them interest-bearing or not. You've got privacy dimensions to play with. And whether you want it to be offline or online, all these things have to be thought through. And at that point, you're in a position to evaluate all the different platforms and find one that works for you. But if some guys already come to your door and said, this is the platform you should use, you may already be handcuffed in terms of the kind of features that you can introduce to your CBDC. So I think that's the key issue, really. It's making sure you got the cart behind the horse, and in terms of the platform decision.
Yeah, no, that's fascinating and really good points. What strikes me is, and it really highlights why we got currency research and you guys want to be working together, because we approach things very similarly with that, and we've seen it in the currency design space, really the actual currency, physical currency, which we spend and have spent a lot of time on. It's a similar story, right? You have to know what your pain points are, how to design that, what to put on it, what makes it most efficient and effective, and then how to distribute it. I mean, one's a physical thing, the other is a crypto type. Maybe I shouldn't call it crypto, but a digital form. But a lot of the underlying building blocks and issues are the same. So it's interesting.
Yeah. I mean, also, if I can add, so John's point about there being a gap, I think it is one of the clear impetuses for us to kind of do what we're doing. But I would also add that there's this, if somebody gets it wrong, like if they do it the wrong way, right, that has severe implications to potentially a country, maybe even a certain civilization, right? Like it can really get us in hot water if we are somehow dependent on CBDC. That becomes our norm, let's say 20 years from now, and something gets messed up and done the wrong way, and then we're in a really bad situation. So I think there's a lot at stake, and I think the banks are recognizing this. What's also at stake is the bank's existence, right? Their existence is at stake. And I think they're coming to terms with this, right? They haven't fully come to terms, because a job at a central bank is a government job. It's a very cushy, easygoing, kind of slow job. You're not making big decisions every day. Maybe the more senior people are making critical decisions on some recurring basis, quarterly, whatever, setting interest rates. But the technology people in that bank are not making any serious decisions. They're not equipped around thinking about innovation, and all of a sudden, wham, all this is coming at them now, and they're scrambling to try to understand it. And if they get it wrong, I believe if they get it wrong, this kind of world order can potentially shift. Like if we get it wrong, if America gets it wrong, there can be serious geopolitical implications to that. And I think part of, when I first met John, I think this was maybe 2 years ago. The way I met John was we were doing some work with the World Bank, and we built a great relationship with the World Bank. And some of the people there introduced me to John, and John and I think we had breakfast at the IMF. And basically, what John was saying is that, hey, we need to be neutral and kind of vendor agnostic and tech agnostic. That really resonated. And that's what we believe as well. Like, this is my approach as well. We need to do what's best for the customer or the client or the country, who the end user is. And we don't see that in the market right now. The IMF is doing its share, the BIS is doing its share, but I think we need to do more of that. Otherwise, we're going to have a lot of these POCs, and we'll start to see some of these POCs show some issues. A lot of these POCs are concluding, for example, the blockchain may not be the solution for a retail CBDC. So there's a lot at stake. That's what I wanted to add to John's point, is that the gap is there, but then also there's kind of like fervor and kind of like this anxiety that exists in the market around getting this right.
And I was going to say, in terms of getting it right, I mean, there's so many different ways that this could fail. Well, I mean, the obvious ones, like you build a CBDC with faulty IT infrastructure, and then it has and so it gets hacked, and that, I mean, that's if CBDC gets hacked, that's the ultimate counterfeiting operation. So that's bad. But also, just as importantly, a central bank's reputation is that's what it's all about, right? It's all about reputation. And so if they introduce a CBDC and it's a failure, I suppose it's poorly designed and nobody uses it. I mean, that's a huge hit to reputation. So there's just so many, and also they could design it so that it does some bizarre things in the financial sector. They design it so that it, for instance, it sucks deposits out of the commercial banks so they can't lend anymore. We call it disintermediation risk. That's got to be accounted for too. So there's so many dimensions of failure here, and that's why we have to do it carefully. And a lot of these smaller central banks don't have the scale to be able to deal with all these different aspects. That's where I think we can come in, and you can actually use this sort of sharing idea that people can share their expertise and so on amongst each other.
Yeah, we've definitely seen that to be effective. I mean, in the conferences we have, both in the currency space, central bank payments conference, and there's definitely in the central bank world, as you guys know, a need to share information about all sorts of things, all sorts of different payments, and central bank digital currency is perhaps the latest one. But I think we definitely see that thirst, and it is when you mentioned the BIS as an exclusive group, you broaden that out a little wider. Central banks in general are an exclusive group, right? And it's you need to get that right venue and organization to come together to say, okay, it's safe here, right? It's safe to talk about it. Yes, we want to know what vendors are out there and be somewhat agnostic and to see what's happening. That's very important. So they all have that information. But at the same time, they need to talk amongst themselves and with agnostic experts as well to be able to kind of think through this stuff and share experiences. And that's what this is all about. So definitely well needed. Tom, I see you're chomping at the bit to get in here. Have at it.
Yeah, no, I think you're one of the things, and we did something live pre-pandemic, and there were a lot of central banks there, and there was a lot of talk about risk and the lack of regulation, and then also the concern of lack of standardization, which I think you guys talked about. I'm super neutral, right, from a vendor side, but at a certain point, there's got to be at least two technologies. And I think, Jamiel, the one thing I wanted to talk a lot about today is around the current events and how much misinformation is out there, from everything to how it works, but also how governments are responding and the risk. I focus mostly on risk and constantly am asked, why only bad guys use digital currency. And then it's like, it's one of the things that really frustrates me, because they assume there's risk because of media. And in the recent, this podcast is super timely, because if you talk about the Colonial Pipeline, the JBS hacks, where there were ransomwares that were paid with cryptocurrency, my response was, if there wasn't cryptocurrency, they would do something else. People kidnapped corporations heads years ago. And in one sense, you'd much rather ransomware than the CEO getting captured while he's on vacation in Europe and then having to pay it. So bad guys do bad things. They always take nefarious actions. But then additionally, just the whole thing about China shutting down miners, what does that mean? And I mean, every time I'm there, this adds this uncertainty to the technology and the confusion of the difference between crypto and digital. And then my favorite topic is blockchain. And when people are like, it's brand new. No, in 1991, it was used pretty heavily. It's just that the news brought it up with Bitcoin. This is not a new technology. It's a very proven technology. Doesn't mean it's the right one. So I know I talked about a lot of different things there, but on a current events standpoint, how are you guys helping educate people and keeping the misinformation to a minimum?
So I mean, to be honest, it's hard. It's a difficult problem, and like there's criminals in every kind of medium, any kind of value medium. People are stealing art, stealing whatever, and so it's not the fault of art that people steal it, right? And it's not the fault of cryptos that people steal it and all that. Even though but there is a significant amount of misinformation. The sources of that misinformation, some of it is identifiable. We know where that some of that's coming from. Some of it's coming from people that have different agendas and motivations, right? It could be a blockchain vendor. It could be a government, right, or something like that they're trying to influence the direction of something. So we see that, and I think our responsibility is to kind of distill some of that facts and really start with some of the fundamental basics and say, well, these things are true and we know these things to be true and here's why, and let's go to academic sources and let's go to other banks that have done some stuff in this space and let's listen to what they've learned, and that's going to be some incredible source of information. That's going to be reliable source of information. But this is all scary stuff to a lot of people. It was just yesterday, it was yesterday. I was texting a person that works at the Kazakhstan central bank, and we were talking about Chinese miners moving from China, which they're basically being banned to run their operations. They're moving to Kazakhstan, right? And I'm texting her and I was like, "Aren't you like, what's your response?" And she's like, "They're worried. There's a little bit of like they're monitoring this. They're just having and I don't know what the basis for that is. It fear? Is it unfounded fear? Is it like these people are going to come in and use up energy there to do nefarious things and things like that? So I think the governments are trying to, and central banks are trying to understand this, and there needs to be a basis for governments to kind of central banks to get that solid information, especially the decision makers that are going to make like the technology decisions and things like that. And we're in the very, very early stages. One of the things we did this workshop, I've learned a lot through this work, even though I'm an instructor in the workshop and the host of the workshop. I sit there absorbing all this information. I'm like, wow, there's a lot that we don't know, and we learned a lot and through that process. And hopefully by accumulating that knowledge during multiple workshops, the workshops become more and more valuable as we pick up more and more information. But one of the things we find is that the banks are still very much not equipped to be able to process all this information and figure out what is really true and what's not really true. And I think that's going to change as they get more and more experience in the space with digital currencies and things like that, as they bring in more and more competent advisors into their banks. I think that's going to kind of change, and hopefully we'll see that more of that this year, next year.
Yeah, I think one thing, and I actually got a couple text messages about the mining piece, and I'm not an expert in mining. My piece is risk, and someone said, what do you think about China banning it? And I said the same thing I would say 10 years, 15 years ago when they banned Google. Google's still here. It's part of the process. Every country isn't going to respond. And the reality is, if you follow China, what happens in China, a lot of things are banned that aren't for China and don't benefit them. So I think the unknowns are out there, and it's interesting that you got reached out by some of the central bank. I actually have a friend in the Northern California market that is now saying we're going to invest more in mining in North America because we can actually produce more than we could before. We now know that we can actually do it the right way because we're not competing with China. And we're going to be more conscientious. So I think it's very interesting. But to your point earlier, this exasperates the myth and unknowns when people see, oh, it's the end of crypto because you can't mine in China anymore. And that's literally what, if you read the headlines, right? That's what you would think by the headlines. And then some folks that are probably more money minded saying, I'm selling all of it. Very, very important people are selling all their crypto. And so it creates this wave. And then the central banks go, is this even real? Is this even a tangible thing, or does an event like this change everything?
So let me read one of the texts that I got. I'm going to kind of like paraphrase a bit. And this kind of indicates the type of controls even Kazakhstan's having on cryptos, especially because the miners are moving. And so she says, for example, I'm reading from my phone, local legislators introduced a bill that would exempt mining of cryptocurrency if the extracted coins were not traded for fiat. So there's no off ramp. So that's a problem too, right? Like that's a form of significant control. And I think that some of that the basis of that is this is a fear, right? Like what does this do to our economy and what does it mean? And I think we're gonna see some of that kind of like you saw India kind of say, hey, no cryptos, right? And then they're like, well, let's think about it again. So I think the pendulum's gonna swing. And our goal through the think tank is going to be, let's get all of the people that are working on research and are willing to publicly be criticized for what they think in these papers and things like that. And let's get those people in front of the banks and have them kind of discuss with the banks what they should be thinking about, and then have the banks communicate with each other. Because we did polls and things like that with these banks, and one of the things they really want to do is kind of interact with each other and learn from each other. So hopefully that can filter some of the misinformation in the market.
Yeah, no, definitely. You mentioned a little earlier kind of learnings you take from these workshops and so forth, and I'm wondering if you also mentioned before that kind of the learnings from some of the pilots that are out there, and maybe not to go too deep into that, but there have been at least a couple pretty decent pilots that have gone on and been run. Are there any kind of key takeaways of? I mean, you mentioned questions blockchain a little bit, if that's the right platform or not, but I don't know. Are there some takeaways from these pilots that are worth highlighting?
So I think John, both and I can answer that question. I know John has a lot to say on this, but we got an early copy of the paper that was released 2 months ago from the Swiss National Bank. And that paper was titled "How to Do a Retail CBDC," and it spelled out some of the parameters that, based on their work and their research, and the governor of the bank, the alternate governor Thomas Moser. I had him on my phone. We were talking on the phone, and he was talking about my book that I wrote on the core of blockchain. We're trading some ideas, and one of the first things I said to him is like, I don't think you can do a retail CBDC on a blockchain, just because the TPS rates the transaction rates are just not going to be sustainable. And he agreed immediately, and we agreed, and we kind of hit it off, and we spoke for about an hour. So I think what's emerging right now, at least on the retail CBDC side, maybe I don't know about the wholesale CBDC side, but the retail side, blockchain doesn't really seem to make sense, or at least the current incarnation of blockchains, where maybe we can hit 50 transactions per second, or even if we hit 1,000 transactions per second, it's still not sufficient for a very large economy. So in that paper, Thomas Moser and two other authors, Christian Grothoff and David Chaum, who is a cryptography guru, and Tom, you probably know about him, the blind signatures and all that, but they spell out these parameters. Number one, that product that's used should be entirely open source, right? And then these other factors that they spell out. So I think the market's coming around to the conclusion that some things touted to be like as great maybe are not as great in certain use cases. I think that's kind of emerging this year. It's like there may be some issues. And we also had a call with this is 2 weeks ago. We had a call with the Boston Federal Reserve with Jim Kuna, and they're working with MIT on a CBDC proof of concept. And we're hopefully we'll be talking to MIT pretty soon with some of the engineers. Actually, was texting one of them this morning, and we're waiting to see what they're going to release as well. I think that's going to be incredibly informative to us, like what they're doing, because you've got this great organization like the MIT, and then you've got a great organization like the Boston Federal Reserve putting their minds together and say, here's something that we feel might be useful. At least it'll be instructive around what direction people should go. So I think it's going to be exciting stuff. And John, I know you can chime in on this as well. He may have been disconnected. So
we'll see if he pops back up in a minute.
So I mean, Jamiel, like, to your point about the whole whether or not it's adequate for retail today, I agree. I think blockchain, but I also can't resist saying that it's 20 years old, right? So the technology works great, but taking in the computing power today and how quickly we can do math, there's a lot of room. So there may be blockchain 2.0 or 3.0 coming. We don't know yet. And then the biggest, I guess, question about the blockchain environment is when quantum computing becomes real, doesn't really matter because we'll have to change the way we do it anyway, because the crypto won't withstand it. You'll be able to, cryptology isn't fast enough for what was designed 20 years ago. It's kind of every 10 years you need to update it. So it's a very interesting time in there. So I'm really curious to what will happen in the retail side of it, but I don't know the answer.
One of the things I say to some of the central banks that I have private conversations with, where I can kind of be a little bit more free with them around suggestions, is it's great to look at Libra and Diem and say, hey, this is a threat to us. The other thing that they should really look at is the DeFi space, right? Not as a threat, but as innovation. The amount of innovation that's occurring in the DeFi space is significant. And my definition of DeFi is very, very, and that's the definition that I'm going to put in my book. My definition of DeFi is very different from the definition that's kind of in the market right now and in academic literature. The definition in the academic literature is that DeFi is the reinvention of traditional finance. I'm like, no, that's true. It's true, but that's not the core value proposition. My belief is that the core value proposition of DeFi is that it's Darwinian, gamified, crowdsourced financial engineering, right? It's the public that in this kind of very fast-paced, frenetic, almost, psychotic speed, anybody can come up and become a financial engineer through code, right? I can create some code and it has an economic model and I deploy it on a blockchain and that code can interact. And if I do something really good, it's going to get traction. And if it's garbage, nobody's going to use it, right? And so it's Darwinian in that perspective, and it's crowdsourced financial engineering because you don't really need to be a financial engineer or a quant at a bank to be able to produce that. If you look at Uniswap, it's 350 lines of code, right? And it's done over, I think it's $150 billion worth in transactions, right? So over the past year and a half, right? And if you look at the story of Uniswap, it's a guy, Hayden Adams, who used to work at a mechanical engineering company. He was a mechanical engineer. He had nothing to do with coding or blockchain. He was working at Siemens, I think it was Siemens based, they're a German company. And he's like, oh, let me just play with smart contracts. And he implemented this thing and it just blew up and it grew. So it's almost like anybody can now financially engineer things. Where does that take us? And I think I do suggest to banks to look at that space and kind of like learn from it and absorb some of what's happening. Like the stable coin space, if you look at Maker, that's incredibly innovative, right? And that is the biggest threat to central banks, is these kind of DeFi stable coins that are going to allow you to move money across globally instantaneously with almost no transaction fees. And I think that's where we're headed. So even if banks do implement CBDC, a retail CBDC, the DeFi market's going to say, so what? We're still going to do all this stuff that we're going to do, and people are going to use us. And so I think that's something that has to come in front and center, but the banks are not there yet. They're more like, well, how do we digitize our currency? But I'm like, okay, that's great, do that. But then you also have to look at the DeFi space and what's happening there, and how are they reinventing the idea of currency?
Yeah, a lot of it goes to kind of what you were saying. What is the value proposition? Why are people doing it? And I think looking at a few of the comments that came up on LinkedIn, it's very similar themed, right? It's like, how is this really different from, or not different from, but if the core problem is getting money from one place to the other quickly and cheaply and efficiently and safely, and the global financial market isn't quite there yet, these solutions will pop up. As you say, maybe in a bit of a chaotic space that's moving pretty quickly, but it's the way that's going to happen. One of the questions, maybe it's a little more technical, but I mean, I think it's interesting to put in terms of scale of these systems, right? I think you mentioned at one point, 50 a second or something in terms of what some of the blockchains are doing. That's obviously not what an entire economy is going to be processing. Order of magnitude's different. So, what do you think would be required? I see a question that came in. Like, what obviously depends on the economy and what the actual use case is. But for a CBDC, presumably that might be a pretty broad sector of the economy. What is a good size? How many transactions per second or whatever?
So, like we have proxies for that information. Like if you look at Visa's annual report, they discuss their transaction capacity. And it's, I think, like on average, it's, don't quote me, but it's somewhere around 15, 20,000 transactions per second. And then they can handle a spike to 40,000 transactions per second. But that's just one credit card company, right? And they know who their customers are. Imagine a CBDC which had some degree of anonymity to it. And I wanted to do a denial of service attack, which is I send Shaun, I send you 10 cents, you send me back the 10 cents, and we keep hammering that back and forth. And we're anonymous, and we do 1,000 transactions per second ourselves just based on our devices. What's going to happen to the infrastructure in that case, right? Assuming the bank doesn't know who we are, like the case is with cash, right? If you're trying to replicate cash and I give Shaun $5 and he gives me back that $5, nobody knows and nobody cares. But if we replicate that with digital currency and I'm sending a very low amount of money back and forth just to like increase that volume of transactions, and even though I'm incurring fees, I might incur very tiny fee. I'm doing basically a denial of service attack. What kind of infrastructure needs to be able to handle that? I think these are questions that have to be answered. And so, if we look at what Visa does, and it's maybe something along those lines, right? I don't know how much along those lines, but that it needs to be in the tens of thousands, right, per second, as opposed to maybe 1,000 or 500 per second, which some of the permission chains get to, and the public blockchains, even though there's some of them are improving, they're getting to like higher numbers. They're not at those numbers that we can run an entire economy on.
And I know this is my ignorance in this space, but it just comes to mind. But there used to be a lot of talk about kind of about the energy consumption used to kind of convert these back and forth. Is that still a challenge, or has that been kind of mitigated over the years, or I don't know?
So we're moving quickly away from the energy consumption proof of work kind of world. Bitcoin is not moving away from that, but Ethereum is moving away from that. There is some delays here and there, but the progress is real, and the movement towards kind of like being kind of not on proof of work, kind of this energy heavy energy usage thing. We're moving away from that. There are other chains that are coming out. The space is incredibly complex now and incredibly innovative and creative, more so than it was like a year and a half ago or 2 years ago. Like 2 years ago, you go to you explain to somebody what blockchain is and things like that, and you can explain it to them. Now you explain DeFi and all of the new stuff that's come out, the layer 2 and all that, and you explain to a blockchain person, and they don't understand it because it's gotten very, very complex. And the speed of innovation is very, very significant now. Kind of very short cycles of innovation. And I think we're going to continue to see that. And we're going to solve a lot of these problems. And I think we'll see a lot of these problems solved in the next 5-10 years. I think we're going to be like the blockchain is the future. It's just the current incarnation is not ideal. And I think we will see subsequent incarnations. I don't know exactly when, which are going to solve a lot of these problems. And it's going through the pain that we're going through now with energy consumptions that are kicking down the doors to be able to get us to the next stage. So in some ways, this energy consumption thing, I don't think of it as a big deal, because the benefit of it is we're moving forward as a civilization, right? We're going to be doing all these cool new things down the road. We just had to take this big hit on proof of work to be able to get there. And I think we will kind of solve all of these problems, and that those solutions are coming up really quick right now.
Yeah. And, you know, I think you kind of mentioned in your example of us sending, 10 cents back and forth to each other and so forth. And that was somewhat predicated on, they might not know it's us, right? The anonymity behind it, which obviously for currency is always talked about as a really good benefit, or a benefit or feature anyway of currency, that you can trade it and there's this anonymity behind it. Are you seeing from the central bank discussions you're having, or the CBDC work you're looking at, the same push and desire for maintaining the whole anonymity behind it? Or is there, I know particularly with the ransomware and everything, it kind of, there's always a discussion around, well, can you trace these things, or should they be traceable, or when does the government get involved to make them traceable? It's a, obviously a big topic, but just curious on both of your thoughts on anonymity and what the role is for that with CBDC.
I don't know if John wants to take that. I don't know, John, are you able to hear us? I don't think he can hear us, right?
I don't know. Maybe. There we go.
I'm here. For the last 20 minutes, I've heard you, Shaun, and Tom speaking, but when Jamiel talks, it sounds like it's coming through a filter, basically a Jabba the Hutt filter. It's exactly like that. I can't understand a word he's been saying, but people who follow me on social media know that I'm a big proponent of anonymous digital currency, and it can be done, but it has to be done carefully and with limits. So there are some vendors out there that have basically systems based around stored value cards that allow for anonymous peer-to-peer transactions, and actually there's good reasons to consider that technology aside from anonymity. Another is you want to have a very resilient CBDC that can operate even when power's down, the internet connectivity is zero. So that's why, for instance, the Bank of Canada is looking at very seriously what they call universal access devices, which are designed to be used in remote areas of Canada where there may be no internet connectivity at all. And so the technology is important to build for that purpose. But I think there's a place for some anonymous rails of CBDC. So when we say CBDC, it doesn't have to be for a specific country one monolithic CBDC that you could imagine two rails, one being one that's based on ledgers, whether they be distributed or centralized, that would be reserved for the larger size transactions and holding limits. But you might also want to have another rail, which would be the sort of anonymous offline peer-to-peer rail that can be used for very small transactions, essentially emulating what you have in your wallet, and that with the intent that you don't normally carry around $5,000 in your wallet. At least I don't. It's kind of a dicey thing to do. So the idea would be having a wallet for those smaller transactions and holding sizes. And in fact, the BOC looks like they are actually experimenting with that. So they've got kind of a multi-rail system too. They've got one version of the ECNY is running on conventional payment rails, and so there's a ledger, and of course there's probably lots of surveillance going through there. But they also have, for limited size, they have devices that allow for anonymous peer-to-peer transactions. And to register the device, you have to, I think it works on your phone, so it works just off your SIM card. So there's like a very little KYC, know your customer, involved. So that's one option. Now I don't know, you guys are the cash guys, so I don't know if you've had a chat with Franklin Knoll yet. Have you talked to Franklin Knoll? Do you know who Franklin Knoll is?
Yeah, definitely aware of Franklin. Haven't talked to them yet, but yes,
okay.
yeah, very interesting.
as you know, he's advocating kind of a hybrid solution, call it essentially polymer notes with embedded chips. He calls them smart banknotes, and that's something that could be interesting too. That allows also for anonymous transactions. I'm a bit of a skeptic because I think, well, what does that add to the equation here? So they have a $10 smart banknote, which you can spend down and then top up again. But it doesn't. I don't think it does anything sophisticated. Like, what happens if I got a $10 banknote and I owe you $5? How do I do that? And I think it's meant to work just like a $10 note. I would try to give you 10 and you give me 5 or something like that. But there's a technology that's interesting. So that it's not a technological issue to offer offline anonymous peer-to-peer capacity, but there are certainly lots of policy decisions around that, and that's why in the case of the PBOC, they on that particular payment rail, they have very, very low limits.
Yeah, it's always interesting to add, the proposal to add microchips or other smart technologies into banknotes. I mean, I think there's a lot of, as you say, it's interesting. Maybe there's small niches, at least initially, that where this might make sense to try out and see what happens. But it's a long way from, I think, any sort of broad scale adoption. People, having worked in the cash business and issued currency for many years with the Fed, people get very nervous when you start even talking about putting electronics into into paper notes. It's almost the third rail. But it's an interesting topic for sure. Maybe on that one, there's a couple questions that came in, but closely related to that one, I think, is, how do you, so there's this anonymity, but there's also data protection. There's some trade-offs there. Any kind of initial thoughts on what those trade-offs are, how you should kind of weigh one versus the other?
Well, there's some design issues that you can work with to try to mitigate that risk. And I don't know if Jamiel's talked about this yet, but most CBDC designs involve an ecosystem that is what they call multi-tiered. So the central bank issues the digital currency, but has to all the donkey work of getting the money out distributed and building wallets and so on is outsourced to the private sector. So one design I've seen that is the one, for instance, used in Uruguay when they did their pilot. They kind of have the information in layers. So the banks and payment service providers that deal with the public directly, they of course have to have some information about who's doing what. This is natural. They're the front lines of the payment transactions, but the central bank sees that information, the specific information in only anonymized form, and they can only tap into that with proper cause. So like if the central bank identifies using some kind of network analysis, there's something fishy happening in the transactions, they have to get a court order, so they have to prove to a judge that they've got just cause to look at the data. Then if they get that court order, then they can go to the bank that's running that wallet and get more information on that. So that's kind of a way you could possibly trade it off. Complete anonymity, when you could achieve that with a purely token-based system, but and it would have to be based on distributed ledger too, I think, to make that happen. And I don't think any central banks are running their pilots or intend to run pilots and launches on that kind of basis. They're all choosing blockchains that allow them, that they're fairly centralized as blockchains go, and so complete anonymity there is probably not an option. But I guess there's a trust issue here too, right? Like in the Uruguay situation, the users have to trust that the central bank will follow proper legal process, and there's no shortcuts, so they can force the commercial banks and payment service providers to cough up information. But that is that's an essential trade-off, and it's very country specific. So I think in the U.S. I've heard stories based on polls and surveys that Americans are more inclined to trust private sector players with their information, not so much trust in government. And then it flips over the other way when you go to Europe, where they're more open to the idea of sharing and losing some of their privacy and anonymity to the government, not so much to the bank. So that might also drive the design of the privacy features.
I think it's important too that when you're talking about this, that there's safeguards and guardrails that people are following. This isn't everybody. That's the number one thing. It's anonymous, so bad guys are going to use it. But there are safeguards in every one of these processes, and it is still fairly new. So there are definitely road bumps, and I think the example you just gave is, yeah, they were very open about the fact that, hey, if we need to get this information, we can. That's going to protect you as well, but we're not going to go ahead and get it. So, and I agree, I don't see a centralized bank ever being, it's probably more de-identified than anonymized, so that if there's an issue that they can go back. As a security guy, I think there has to be a balance. It's not really good for everybody if it's 100% anonymous. It doesn't really work in the real world that way. And it's probably that misinformation piece that goes back to what we said earlier about the ransomware and all the media jumps on the negative and doesn't really talk about, well, yeah, there are safeguards in place. And like the Colonial Pipeline, the FBI was able to seize that money because they went after it and they wanted to seize it. That's the key. And that's a good thing. That's not a bad thing. So the criminal element, crypto and digital currency is not about criminals. So that's one of the big things I'm constantly faced with. Bad guys only use it, and there's a huge subset of and a need for it.
Yeah, and also, anonymity works against you when you lose your wallet too. Let's suppose you have then that's brought back to that offline device I mentioned. Suppose you had your life savings sitting on that wallet, and then you drop it, you drop it down a sewer or something, or it goes, just gets broken or whatever. Well, tough luck, that's gone, just like it would be if you lost your wallet.
Yeah. Last I checked, Pablo Escobar, when he was alive, was a cash guy, right? All he dealt with was cash, right? And they're like buried in different places, and and like he was the only guy that knew it, or I don't know, we all seen the Narco series on Netflix, right? And so like they all dealt with cash. They would not want to use cryptos. Like if I was a drug dealer, I would not want to use Bitcoin. Like I want to stay away from that because of the traceability and all that. So I think I don't have the data and the stats for it, but I think it's easier to commit crime with cash than it is with digital currency, I would argue.
Yeah, I mean, any as we said, any payment system has its fraud and people trying to get over on it. I think it's always interesting when you compare the cash and digital currency. It's like, yes, if you lose your wallet down the drain, you're out the money, but it's only what's in your wallet, and that's like what we're saying here. Like if you put everything into CBDC, which you probably wouldn't, but if you if you did, that's potentially a bigger risk. But there's other safeguards in place. I mean, so we're running a little low on time, but there's a couple more questions that we didn't get to, but maybe just quickly, because I don't want to leave folks out. There was one question on stable coins and monetary policy that I think we could spend a minute on or so. So what levers of monetary policy are hindered should stable coins flood the market or gain big popularity?
All of them. All of them are gone out the window. I mean, let's imagine a society that runs on DAI, make or die, and everybody's using that. What's the role of the central bank in that? There is none. So there is no levers. All the levers go out the window, potentially. I'm not saying that this is going to happen, or nor am I saying that it should happen, but it can happen. And if we have global pervasive use of stablecoin, and everybody's got mobile phones and all all of that, all monetary levers, interest rates, all that go away.
Yeah. And maybe very loosely, maybe related to that, but this question around, it brings me back to, should there be one universal one that CBDC that somebody like the IMF issues, like a digital SDR or something like that? It brings me back to a lot of the days of paper currency, right? You had every colony back in the day putting out their own paper currency, and finally the U.S. government said, "Whoa, too much counterfeiting. No one knows what anything is. Here's U.S. currency," right? So there was a need to standardize. Now that's within one nation. I think you probably, enter a whole realm of other issues, monetary policy and otherwise. If you're going to put some sort of multinational, I mean, look at the euro and the work that had to go in just to get a common currency, broaden that to a global crypto central bank currency seems a little bit problematic, but I'll toss it, or maybe a lot problematic, but I'll toss it over to the experts for some thoughts there, and then we'll wrap up.
Well, you were bang on when you said that there's a lot of political dimensions to this. I mean, there's already we've got the ECB, we've got ECCB. They're running the currency zone too, and I think some of the Western African countries are working on it. But in a way, again, we got a kind of a cart before the horse problem, because I think that before you even think about a digital multi-currency type of operation, some kind of basket currency, you've got a lot of political dimensions you have to wade through to get there, and that's not even a digital currency question. That's much bigger, because when you do go to a currency basket, you are giving up monetary policy control and monetary sovereignty. So and like, for instance, I'm from Canada, so there's always talk about, Canada could adopt the US dollar, that'd be rather convenient. Well, no, most Canadians want their monetary policy to be set by the Bank of Canada in Ottawa. They would prefer that. So I think then if you go to global, say an ESDR, I just can't imagine the discussions that would take place on doing that. At the IMF itself, you've got 190 countries or something who have to agree that this is a good way to go. And can you imagine the Fed wanting to give up monetary policy? Because they would be one of the biggest parts of that ESDR basket, and China too. Does the Fed want to give up monetary policy to sort of some kind of consortium consistent of countries like China and many others? I'm pretty skeptical about that option, but I can still see a need for it. I mean, that was the original version of DM when it was called Libra, was an SDR like digital currency, and I can see there being useful for some purposes, like some kind of cross currency rails, and that's where this concept of multi CBDC has cropped up recently, and that's something that the BIS and others are looking at. Perfect.
Well, thank you both for joining us. I mean, we definitely went through a range of topics here on CBDC and crypto, but it just shows that there's so much to talk about, which is why we're excited to continue these discussions. I know both you guys have the CBDC think tank workshops and educational series that you guys are running. We've got the Digital Currency Conference coming up in February, and the workshop before that with you all, and maybe some additional ones that we'll work on together between now and then. So Tom and I think both want to thank you for joining the podcast, and thanks everybody for listening. And stay tuned on LinkedIn for more stuff, and join us with the Cash News podcast in a week or two when we post our next episode. So thanks for joining us.
Yeah, thanks for having us.
Thanks, Shaun and Tom.
Absolutely.
Thank you.
Thank you.
Yep.